Ever heard of a neobank? Well, you're about to, as Australia's first digital-only bank opens for online business.
Now, gone are the bricks and mortar. Everything from mortgages to credit and debit will be done via the internet. To tell us more, we're joined by financial advisor Patrick Canion from Perth. Good morning to you, Patrick. Very early for you.
Good morning.
Tell us about neobanks. What do you think? Are these the way of the future? We'll just never have face-to-face anymore?
Well, I think they're fantastic development. It's very exciting. More and more, we're very comfortable with dealing with our money issues online. So the fact that neobanks are coming along to bring more competition into the banking sector, that's great news for consumers. You know, more competition usually means lower prices and better services and more choice, so everyone wins in that case.
I remember, Patrick, in the latest round of government regulations regarding banks, which were, as you remember, strenuously opposed by the big banks, one of their arguments was that these smaller banks are not subject to the same kinds of regulations and protections as the big guys. Are there disadvantages with a neobank or any smaller bank?
Well, initially, the neobanks are going to have a relatively limited range of products and services. But online banking's great until something goes wrong. And sometimes, you know, banking is a people business. Sometimes there's no substitute for being able to go in and sit opposite someone or get a real person on the phone. So that is going to be one of the challenges the neobanks have to face up to.
Even if it takes you a while to get to that person on the phone.
Yes, even if it does.
Mary at the North Rose Bay, Cornwall.
Very good.
Unbelievable.
We should all switch there, even if you're out of area.
Yeah. I travel from Bankstown just to see Mary.
Worth it. Moving on, Patrick, and the Reserve Bank has announced that they would be keeping the cash rate on hold at 1.5% for the 15th consecutive month. But a lot of people think that by fixing their loan, they're locking in at that low rate. But the advice at the moment is don't fix. Why?
Yeah. Well, the first thing to understand is when you fix your interest rate, the bank will win. Over the term of that loan, you'll end up paying more, but in return you get peace of mind of knowing your rates aren't going to change. But when we're in this environment where interest rates look to be steady or maybe even dropping a little bit over the next couple of years, if you're comfortable to ride that, if you like, it's better off, that money's better off being in your pocket than the bank's. So we're thinking stay with variable for the time being if you're comfortable to do so.
But if you've gone on to variable for starters, can you then switch to a fix, you know, a couple of years down the track when it looks like interest rates are going to rise?
Yeah, absolutely. I mean, the thing to understand is it's not set and forget. If circumstances change, go and talk to your bank or your neobank, as the case may be.
I mean, I was looking at some of the different rates last night, and it seems most people are paying about 4.75% on their home loan. But, you know, then there are deals out there on variables for like 3.9%. That's quite a big difference.
There's a huge difference. And, you know, 1% doesn't sound like a lot, but over the term of a loan, you can save yourself thousands of dollars a year. You know, $500,000 mortgage, 1% on that is over $3,500 a year.
Wow.
$800,000, you're looking at over $5,500 a year just on 1% saving.
And then you look at that over the course of a mortgage, that's a hell of a lot, right?
Well, exactly. And better yet, if you can reduce your interest rate but keep your payments the same, you can take over 5.5 years off an average 30-year mortgage. So,
I mean, can you imagine over the course of, like, Koshy's 24 mortgages, you know,
how much he could save?
Totally.
That's a significant...
Incredible. That's it all adds up. I mean, and again, the money's better in your pocket than the bank's.
So how do you get that better deal? You just ring them and say, listen, not good enough. I want you to knock 0.5% off my mortgage rate.
Well, there's one thing to do before that. Shop around and get the facts. Okay? Because no one will care more about your money than you do. So every day we have our clients and people that talk to us, they do their homework and they go back to their bank and say, hey, do you know I can get this deal somewhere else? The banks don't want to lose your business. They'll sharpen the pencil. And but if they don't, you can move. And you're better off.
Yeah, good eye. And you get your pencil sharpened.
And you get your pencil
I
sharpened.
understood everything that you said this morning. Thank you so much. Great to talk to you. We really appreciate it.